Look, I don't have any equity positions. I'm basically all crypto. I'm hoping to add to Ethereum soon, and I will probably continue to add to that, because if I look at the chart of Ethereum versus Bitcoin, it looks like it's basing. Usually, Ethereum is also very much following the 2017 Bitcoin cycle, both in price, in number of wallet addresses, in market cap. I mean, it's identical. It's kind of spooky, which tells you this is being driven by Metcalfe's law and adoption effects than almost anything else. So if that's the case, then we know Ethereum has a decent chance of getting to 20,000, considering right now it's at 1,180. I mean, holy shit, that's a value proposition. Even with Bitcoin going to 200,000 to 300,000, one's 8x, one's 16x from here. And I'm hoping I get a dip, but if not, I'll still buy it, because I'm not worried about the 50% correction. Just to clear, why am I not worried about the 50% correction? I've got no leverage in the trade. I know what I can stand to lose. It's not, I'm an all-in, this is my whole life is riding on this. It's not. This is a very significant bet for me, but taken from a calculated risk perspective. So firstly, let me just give you a path. I think there's a correction coming, as we talked about at the beginning. I think it'll hit emerging markets too. The dollar goes up, emerging markets are going to get smoked. Everything does. But in the end of this process, the dollar is either likely to break lower over time. I think it goes higher first, but over time breaks lower. Or my actual hunch is it trades in a sideways range, which is miserable for FX traders, amazing for emerging markets. Stable US dollar is beautiful. So if I look at the chart of the EEM, there's a simple ETF that you can trade. Look at the monthly chart of that, or the underlying MSCI Emerging Markets Index, and it's just a massive wedge pattern. I mean, it's a thing of beauty. And it looks like you've got, most of these emerging market cycles tend to give 400% upsides. That's huge. So we are almost record undervaluation of emerging markets versus developed markets. We're the largest outperformance of the S&P in history against emerging markets. We are set up for a hell of an opportunity. And if the dollar stabilizes for any period of time and there's some global recovery, which obviously will be coming, these countries have less debts, less aging demographics, less problems, more outperformance. So, and it is generally a 7 to 10 year cycle. So you can buy emerging markets and go to the beach. So how you asset allocate is 3 buckets: liquidity preference, time preference, risk preference. So liquidity preference, you want the thing that's liquid that you can get in and out of when you start the trade, when you don't know it's confirmed, because you want to be able to get in and out quick, right? You'll do the same in crypto. It's Bitcoin or nothing at that point. Then you start setting your time preference. Okay, I feel like I'm on the trend and I've captured what I think is the start of a larger move. So therefore, I'm willing to hold longer holding periods. So then I might start looking for other areas, or I build a larger position. And let's say EEM is the chosen starting vehicle, because it's an ETF to trade in and out. Then you get into risk preference, the next part of the cycle. When it's established, all investors then start moving out the risk curve. And that usually happens maybe a year or so afterwards, maybe 2 years, where they start thinking, actually, I want to juice this trade. So we see it in crypto markets. It goes to Ethereum, and then it goes to Cardano and other things, and then maybe it's DeFi, right? People move out the risk curve because they think, okay, the trend is set and I can hold a bit more risk than I want. Credit investors do the same. They start with single A, they go down to triple Bs, and then they go into junk the same way in private sector lending. The next phase behind that is then choosing which markets do you really want to own. Where could you get alpha above and beyond the EEM? My view for that is India. I think it is the next decade. I mean, I'm half Indian, I spent a lot of time there. And this market, what's going on in India at an infrastructure level, technology level, is mind-blowing. So there is a lot going on there. It's still early. It's like being in China in the 90s. So I'm very interested in that. I'm also interested in the countries that surround India that have young populations and low debts, high household savings. I call them the monsoon countries. and India's at the center. It's basically the Indian Ocean. That is the less investable, which is the Swahili coast of Africa, Kenya, Ethiopia, Kenya, Tanzania, down to South Africa. On the other side, you've got Singapore, Indonesia, Malaysia. On the north, you've got the riskiest but most rewarding market of all is Iran. You've got Dubai, you've got Saudi, you've got Morocco, Egypt. There's a bunch of these countries that have incredible demographics, and some will be long, some will be shorts, but you'll have a lot to play in that sphere. But with India as the core allocation that should outperform. Time horizon matters. My crypto bet is that it's going to destroy every other asset on earth performance-wise, and it's going to suck everybody in on a massive reflexive loop. The more the market cap goes up, the more the institutions need to buy it, because they need to not lag behind the institutions that already bought it. The more it goes up, the more retail buy it. It becomes a very reflexive loop. So that is too powerful. I look at the charts of Bitcoin versus every asset, and it's basically eating them all. So that will play out, and as you've said before, we know how these things end. They end up in a bear market for a while. That's normal. It's just human behavior. It's how markets work. No market goes through a big bull phase or a big bear phase without a massive reversal phase for a while. So what I'm trying to do is set up a time horizon for people to understand is, okay, this is my bet for now. May not like the crypto bet, so start looking at the emerging market bet, but I still think there's 6 months risk window here that I wouldn't do the trade. 6 months risk. Crypto may or may not have a correction that it should do, but just an ordinary correction, and then it should explode. Emerging markets, if you can buy them into a sell-off, fantastic. That will set you up. You can go to the beach and forget about it. Then, as that trend reestablishes and it starts proving itself, you go further out into the risk curve. So you start going into India and you start going into other markets. Gold should get taken along most of that ride too. So there's a whole phasing here. So I know people get confused, but I see things in future expected probabilities. There's a path to get there. The path isn't everything all in now. It's like, this is the phase for crypto. We're in a risk phase for markets. That risk phase for markets will set us up for emerging markets, because the dollar may go up first. Then let's say the dollar stabilizes or weakens. Emerging markets will take off. It'll start sucking in equity market capital out of the US system. So that's how I see it. So I think whether it's cash or some hedges, just be careful. Correlations fall apart in these things. Gold can get a washout. Even Bitcoin can get a washout later on.